what we do is we have some proprietary technology here. This is your main chart right here. This is what we call the volume cluster. Okay, and it's important because it shows you imbalances and it shows you where the book is dead and printing and where there's actual volume. Okay, as you can see here, you see these light boxes, like how light they are. There's almost nothing in there. It means that there's not a whole lot of activity. The market's coming down here. It's printing, right? But and you can even see here how the market's not moved. Finally got some ticks. But that goes to further the argument. As you can see here, not a whole lot of volume making the market print down here, which is why these boxes are very light. And then as you can see, as the market moves back into areas that are more widely accepted, if you will, you see a lot of activity, or where your points of control for this bar would be. You can see up here, not a lot of activity on either the bid or ask. You have a lot of printing here, which is why price has been staying here, and it's not really ticking, as you can see. It's kind of just staying, waiting for somebody to hit the bid, but that's a different story. So it's important to know why the market trades the way it trades, right? So let's go back over here. As you can see on this bar, where we had a lot of spike up, like just it was in kind of a little holding pattern, just chopping around. There was a lot of imbalance, as you can see. A lot of imbalance. You had a big buy imbalance here, okay? Pumped it, caught a little sell imbalance, we dropped it, another buy imbalance. It's like they had it just chopping all over the place, and all of a sudden, the market just finds a bottom right across what was a chop zone, like a widely accepted chop zone. You got a lot of buy imbalance here. Again, more buy imbalance. As you can see, these lines here are buy imbalances, meaning that there's a big difference in the ratio of buyers to sellers. So you knew right away something was up, okay? Right here, you knew. The market was chopping. There was a lot of sell imbalance. The market came down. Sell imbalance. Market came down. Couldn't really break it. Had a little buy imbalance. Tried. Not a whole lot of volume. Couldn't do it. Came back, just drifted down, popped it, right? Got a little bit trigger happy here, sellers. We tried to drop it, but somebody knew, right? Somebody knew what was up. There's no volume. You got people really dying to short this thing, praying that we go under 10,000, trying to get that short. And what happened? They gobbled it up. Bang, bang, bang. You see? Bang, bang, bang. And then what happened? Nothing. So yeah, I mean, that's pretty much what I'm getting at. How does a composite chart give you that advantage? Like, there's no way. I mean, by the time the move that you're looking for happens, if you're watching a composite chart, I mean, you're not getting any information off that from a volume standpoint at all. I mean, it just is what it is. This is what's inside of a candle, right? And now this new bar just opened up. You got a little bit of a sell imbalance immediately. You have people printing the bid. There are definitely people pressing that bid, right? Let's see if it translates into anything, because it looks like we do have some trapped buyers along the way. People that didn't take a hold, maybe took profit, but I'm sure we have some late longs here for 100% certainty. So let's see what happens here. But this is your upper. This is your volume cluster, your main gauge of what's going on. To your right, you have a continuous volume profile. This is the XBT USD on BitMEX over 60 minutes. And when I say 60 minutes, it's not. This is like a continuous picture of what's going on. It's 100% real time. It's not like you would see on a composite-based volume profile. So if you look at this, you can see, we at the very top printed that LVN, right? And they brought it way back down here to what is now the point of control in a double distribution, or pretty much like a double distribution. It came down here. It got shorted way down, trying to get under 10K. It got under 10K. Then you got your other LVN, and people got long. We didn't stay too long down here because again, we had this buy imbalance that triggered, and if you watched this on Cignals, you would have saw the absorption, right? Everybody was trying to get short here. Everybody. It was like, here you go, bang, bang, trying to get short, trying to get short. But if you were watching Cignals, all these people getting short, I mean, this bar forms, that's massive absorption. You should have known, okay, especially coupled with, that's like major confirmation. Basically, at that point, I mean, all the sellers are getting their orders off the books, which is why, you know, it didn't take much. You see it starts to get a little lighter on the bid, right? It doesn't take a whole lot, I mean, to get it to this point. You know, it looks like a lot of people were pulling their orders off the books and kind of made it a little easy for people to lift it up. But then, you know, it got dead completely. There's no imbalance at all. I mean, it's kind of an even market. It's trending sideways until there are no more organic buyers. You have late longs. I'm sure there are early longs taking profit into this. And then, now here we go. They're dropping it. Trying to, I guess you have some buyers trying to defend. But that's what led to that mini distribution, double distribution, because you had some trading down here from the attempted shorts. They trapped the shorts, you know, pulled all of those orders off the book and then let it just pump. You saw the imbalance, and that's where you have the second distribution, where we're currently trading now. I would think, you know, at some point you're going to come and try to fill this in, kind of maybe try to attack the lows if bears can get control of it, right? So that's kind of what we got going on right here to your right. It's basically a continuous volume profile that takes control of the 24/7 nature of Bitcoin, and with some proprietary technology, displays it in a continuous fashion. So it's like, even though it's 24/7, and if you were watching this on a composite-based setup, it'd look way different. This shows you the true picture of just the volume. So it's very advantageous to have it set up this way. So for the sake of time, getting into your lowers, right? Over here, this is your Sigma reader. And Sigma reader is a piece of work that we developed for our algorithm Cookie Monster. And you can see it actually ticking right now, which is cool. Not a lot of activity, but when you notice as we're spiking, you get that it looks like somebody, can't really tell. It might have maybe even people. Yeah, no, it's starting to tick up a little bit. Yep, you can see it here, like right here. It's going to start, you know, getting greener as it goes up. Maybe we're going to try to press the highs. Who knows? So this will give you an idea of the pressure and how much force is being applied to the book in relation to a benchmark, a proprietary benchmark. So for the sake of time, I'm going to keep it moving to what we call the cumulative delta. And this is not your traditional cumulative delta, because the way Bitcoin trades, the nature of the market, there's a lot of noise. There's a lot of ways that this data could get skewed, messed up, misrepresented. So it had to be ingested and formatted a certain way, right, in order to make the data make sense continuously. The same way the profile would look a lot different on composite than it does here, which is continuous, the continuous picture, right? So this is really good, as we saw earlier, for confirmation and for divergence, because again, here, let's go back to this example here, you saw pretty much immediately divergences. The original move down, I mean, obviously you can see it was heavy. There was a lot of sell pressure. There was a lot of imbalance. But from that point on, I mean, you got all these rebounds, and you got, you know, even though there was some pressure back down, I mean, even here, look, I mean, you got divergence pretty much immediately at like this little bit of a local low, right? And then again, more divergence as it's pretty much should be coming down. You got a little bit of pressure skewed down, but again, the whole way through. I mean, from here on, coupled with, especially here, the fact, your first clue, as the market was coming basically down, right? Coming down, you got that bar here, and then you again, like, divergent, right? And then again, it opens up, and then boom, they tried, and then again, it just speaks for itself.